Welcome back to the channel, everyone. Let's get straight into it because what's happening right now in the world of XRP isn't just another crypto story. This isn't about charts or hype or another pump narrative. This is about a global financial power shift that's unfolding right in front of us. And most people still don't see it. The truth is, they want you out before the real move begins. You've probably noticed how the same headlines keep repeating. XRP is dead. Ripple lost momentum. Regulators will never allow it. Every single cycle, the media runs the same psychological playbook. They flood the space with fear, uncertainty, and doubt, just as the groundwork for the next major shift is being laid behind the scenes. It's not coincidence, it's conditioning. They did it with gold before the Bretton Woods reset. They did it with Bitcoin before the institutional run-up. And now, they're doing it again with XRP. Because XRP isn't just a cryptocurrency, it's a strategic asset engineered to move money across borders faster than any existing system. It's designed for banks, institutions, and payment networks, the same infrastructure that controls how value moves globally. That's exactly why the big players want retail investors distracted or disinterested. They need you to exit before it becomes obvious that XRP is the plumbing beneath the next global monetary layer. Look at what's happening around the world right now. Central banks are drowning in debt. Governments are printing like there's no tomorrow, and fiat systems are collapsing under their own weight. Inflation isn't slowing, it's being normalized. People are losing trust in traditional financial structures, and the elites know it. They're not panicking, though. They're rebuilding the system under the disguise of innovation. And if you think that sounds extreme, look at the timing. The IMF, BIS, and World Bank are all pushing for digital cross-border solutions. At the exact same time that Ripple's technology, specifically XRP, is being tested, discussed, and quietly adopted in pilot programs globally. Every major shift in financial history starts this way, quietly, strategically, with the real integration happening long before the public ever finds out. So, when I say they want you out, I mean it literally. Because this phase, the one we're in right now, is where accumulation happens. Not the flashy bull runs, not the headlines. This is when the insiders, the institutions, the so-called smart money, are positioning themselves while the average investor checks out of the game. It's the silence before the storm. And the storm isn't some random price pump. It's a complete rewire of how value transfers across the world. Now, think about how long Ripple has been in the shadows dealing with the SEC case. Everyone thought that lawsuit was meant to destroy XRP. But what if it wasn't? What if it was designed to buy time, to stall mass adoption until the global financial rails were ready for a synchronized rollout? Because while retail traders argued on Twitter about security versus utility, Ripple was meeting with regulators, central banks, and payment councils. That's not coincidence. That's calculated alignment. And that's exactly why the system wants your focus elsewhere. Because the moment you realize what's happening, it's already too late to position yourself. This is how every major wealth transfer begins. Confusion at the top, silence at the bottom, and opportunity in between. The difference this time? The infrastructure is digital, programmable, and borderless. XRP is sitting right in the middle of it, quietly waiting for its trigger moment. So, as we move forward, remember this. It's not about what the media says. It's about what the institutions are doing in silence. The XRP story isn't over. It's just getting started. And what comes next will define who truly understood what they were holding. All right, now, let's dig deeper into what's actually happening behind the curtain. Because once you understand the plumbing of the new financial system, XRP's positioning becomes impossible to ignore. See, everyone's focused on the price charts, but the real game isn't being played there. It's being played in infrastructure. ISO 2022, BIS projects, and institutional settlement layers that are quietly connecting the global banking system into a single digital network. ISO 2022 isn't just a messaging upgrade. It's a complete rewrite of how financial institutions communicate value. Every major central bank from the Fed to the ECB, the BOE, and the BIS is migrating to this format because it enables richer data automation and digital asset compatibility. And guess which token was built from the ground up to integrate with this standard? XRP. Ripple didn't just wake up one day and decide to fight the SEC. They've been working with regulators, governments, and payment providers since 2015. Their focus isn't retail speculation, it's institutional settlement. They want to be the bridge for real-world money flows, not another volatile coin for trading hype. And now that ISO 2022 has officially gone live across multiple banking networks, XRP's technical framework suddenly makes perfect sense. It's like the missing puzzle piece just snapped into place. Let's connect a few dots here. The Bank for International Settlements, BIS, has been running digital settlement pilots under its Project Nexus and Project Dunbar. These initiatives are testing how multiple central bank digital currencies, CBDCs, can interoperate for cross-border payments. Guess what? Every single one of those pilots needs a neutral bridge asset that isn't tied to any single nation's currency. XRP fits that description perfectly. It's decentralized, regulatory compliant, fast, and scalable. Everything BIS has publicly stated is essential for interoperability. And here's where the timing gets interesting. Over the last few months, multiple financial giants, BlackRock, Citi, JP Morgan, and even DTCC have been moving aggressively into tokenization. They're building systems to represent real-world assets, bonds, treasuries, funds, on distributed ledgers. That's not crypto adoption. That's the merging of traditional finance and blockchain infrastructure. Ripple's entire model is built around this exact use case. Think about it. DTCC handles over 2 quadrillion in securities every year. Even if 0.01% of that volume were to flow through tokenized systems using an on-demand liquidity bridge, we're talking about billions in daily settlement potential. And again, XRP is designed for that exact function: instant settlement without needing pre-funded accounts. The next phase of this shift won't come with hype or retail euphoria. It'll come with integration announcements, quiet, boring updates that most people will scroll right past. But make no mistake, that's when the foundation gets locked in. Once Ripple's on-demand liquidity, ODL, becomes embedded within global payment corridors, XRP won't need hype to move. Utility itself will dictate the price. And that's the moment where XRP truly decouples from Bitcoin, when its value is derived from transaction throughput and liquidity demand, not speculative trading. That's why the smartest investors right now are watching regulatory developments, BIS statements, and ISO rollout schedules, not YouTube hype or Twitter drama. Because when these institutional systems flip the switch, and they will, liquidity will start routing through assets that actually solve a problem. XRP doesn't need retail hype, it needs adoption. And every signer, from BIS pilots to ISO compliance to Ripple's global banking partnerships, points to that adoption quietly unfolding in real time. So if you're holding XRP and wondering why the price feels suppressed, it's not because it's dead. It's because the real players are still loading up while the retail crowd is asleep. Here's where things get very real, because XRP's next phase isn't about hype or speculation. It's about utility-driven price discovery. Let's talk about what that means in practical terms. Right now, the majority of cryptocurrencies rely on narrative momentum. They move up or down based on hype, news, or Bitcoin's dominance cycle. But XRP was never designed to play in that sandbox. Its architecture was engineered for global liquidity efficiency, not for volatility. In fact, the higher the liquidity demand through the XRP ledger, the more stable the price becomes. Think about how central banks stabilize fiat currencies by increasing circulation and balancing supply with demand. XRP's long-term stability works in a similar way. As volume scales and trillions of dollars begin moving through it daily, price volatility naturally compresses. That's when it stops behaving like a speculative asset and starts functioning like a neutral global settlement layer. Now, here's where most people miss the plot. They think a stable XRP price means no profit potential. That's flat out wrong. Before it stabilizes at a global liquidity equilibrium, it must reprice to a level that can handle that volume. And that repricing event, the one where XRP stops following Bitcoin and finds its real utility value, is going to blindside the market. Because here's the math no one wants to discuss. For XRP to facilitate even 1% of global cross-border settlements, it would need a liquidity pool in the trillions. There simply isn't enough supplies circulating at current price levels to support that without massive appreciation. And that's why the system will force a revaluation. Not through hype, but through sheer liquidity mechanics. Institutions don't buy XRP to flip it. They acquire it for on-demand liquidity, meaning they use it to bridge fiat pairs instantly, say USD to JPY, without holding massive pre-funded accounts worldwide. That frees up trillions of dollars trapped in Nostra Vostro accounts today. Once these banks realize they can release that capital and still process faster settlements, it's game over for the old system. And remember, XRP's supply is finite. Once large institutions lock up liquidity reserves, circulating supply for retail will drop sharply. That's when scarcity collides with utility, and the price ceiling you're used to disappears overnight. People laughed when XRP traded at 20, while Ripple was quietly signing global payment partners. They'll laugh again right before the switch flips, and then they'll act confused when it's sitting at $50, $100, or higher, because most investors are trained to chase hype, not fundamental network adoption. This is also where the decoupling event becomes critical. Every market cycle, Bitcoin dominates liquidity flows, but that dominance is breaking fast. We're already seeing institutional infrastructure prioritize tokenized settlement layers, not speculative stores of value. When XRP begins processing real liquidity volume across Ripple corridors, it won't move in tandem with Bitcoin anymore. It'll move based on transaction demand, something no other digital asset is currently positioned to do at scale. And when that happens, expect the narrative to flip entirely. The same analysts calling XRP a dead coin today will be explaining why it's the most efficient bridge asset tomorrow. Because once those payment rails are operational, the price won't move because of hype. It'll move because trillions are flowing through it daily. So, while most retail investors are waiting for influencers to tell them XRP is pumping, the smart ones are watching BIS pilots, CBDC trials, and liquidity reports. Those are the breadcrumbs that lead to the real move. The utility-based explosion that no one will believe until it's too late. Now let's cut to the chase. This so-called flip the switch moment everyone talks about. It's not going to be a single dramatic day where everything changes overnight. It's a sequence of regulatory and institutional triggers quietly aligning behind the scenes. And when the final one clicks, XRP's true utility phase will ignite without warning. See, what people misunderstand is that Ripple has already built the infrastructure. The rails are there, the corridors are tested, the partnerships are signed. What's been missing is regulatory clarity. The legal go signal for global banks and payment providers to fully integrate XRP into their core systems. And that's exactly what's shifting now. With the US court ruling confirming XRP isn't a security, Ripple removed the single biggest roadblock holding institutions back. That's why you're suddenly seeing Ripple executives meeting with central banks, IMF officials, and global regulators instead of influencers. They're not chasing hype, they're laying down policy frameworks. Because once the regulatory clarity spreads across major jurisdictions, banks can legally use XRP as a liquidity bridge without touching the legal gray zone. And here's what most retail investors are completely missing. Every pilot Ripple runs with a bank or CBDC platform is essentially a live liquidity test. They're mapping real transaction pathways, USD to Euro, JPY to GBP, SR to INR, to stress test XRP's throughput and price stability. When those corridors prove reliable, they scale them quietly. No announcements, no fanfare, just silent expansion. That's why the phrase "flip the switch" is misleading. It's not a button, it's a network readiness milestone. And once the system reaches global liquidity depth, enough on-chain volume to sustain institutional-grade transactions, the price of XRP must reprice upward to maintain functional liquidity. That's the hidden trigger. Think about it like a central bank revaluing its reserve currency. They don't call a press conference to say, "Hey everyone, we're about to adjust the global settlement layer." They just do it because the numbers force their hand. Liquidity demands exceed supply. The system rebalances and suddenly XRP isn't a $1 asset anymore. And don't forget the integration factor. Ripple's partnerships with entities like R3, Swift's ISO 2022 migration, and BIS cross-border settlement projects are all converging toward interoperability. It's not competition, it's absorption. When banks shift from testing to deployment, XRP doesn't need to beat Swift. It just needs to run underneath it, silently handling the heavy lifting of settlement. Speed and liquidity balancing. Now, let's talk psychology because retail always reacts late. When the charts start moving and the headlines start screaming XRP explodes past $10, most investors will FOMO in right at the liquidity top. But by that point, major institutions will already be positioned holding the majority of supply for utility, not speculation. That's why patience right now is more valuable than trading hype cycles. XRP isn't designed to reward day traders. It's designed to reward liquidity providers and early holders who understand its endgame. Once utility-driven demand kicks in, it's not about whether XRP hits $50 or $500. It's about whether you even have access to enough liquidity to buy any at all. So when you hear people saying the switch is coming, don't think of it like a movie scene with fireworks. Think of it like a power grid humming quietly, invisible, stable, running everything in the background. Because that's what XRP's destiny really is. The silent infrastructure behind global value movement. And once that grid goes live worldwide, you won't see it happen. You'll just wake up one morning, check the charts, and realize XRP is no longer priced like a speculative asset. It's priced like the backbone of global liquidity. Here's the truth that most people still refuse to accept. XRP was never meant to be a meme coin or a get-rich lottery ticket. It was designed to be the plumbing of the new financial world, the invisible layer that moves trillions across borders while everyone else argues about hype tokens. And the Western Union story perfectly exposes that divide. Big corporations like Western Union still think they can modernize by keeping control, by launching a stablecoin on Solana and pretending they're part of the crypto revolution. But they're missing the point entirely. They're still middlemen, still charging tolls, still deciding who gets to use them. Rails. It's innovation dressed up in the same old business model. Meanwhile, the XRP ledger stands on the opposite side of that battlefield. No gatekeepers, no central authority, just a global, neutral system that doesn't need permission to operate. It's the same ethos that made Bitcoin revolutionary, but engineered for real-time liquidity and institutional-scale payments. That's the core difference. XRP isn't about rebellion anymore. It's about replacement. It's what comes after the rebellion. The system that actually works. And that's why Western Union choosing Solana doesn't scare me. It actually proves the point. XRP doesn't need to beg corporations for validation. The real power shift will happen when users, businesses, and even small banks start realizing that they can do everything Western Union does faster, cheaper, and without them. When that happens, middlemen become irrelevant. The irony is, companies like Western Union are racing to stay alive by using blockchain to protect the very model blockchain was built to destroy. That's not long-term strategy, that's survival mode. XRP, on the other hand, was built to thrive after the collapse of that model. That's why it's still here after a decade of FUD, lawsuits, and market cycles. The fundamentals never changed. The world around it is just finally catching up. Now, I'm not saying XRP's next move will be overnight fireworks. It won't be. What's coming is a slow burn, the kind that creeps up quietly, then suddenly becomes unavoidable. It's happening in corridors like Asia, Pacific, Africa, the Middle East, regions where Ripple's ODL is already replacing legacy remittance networks step by step. Once those routes scale globally, liquidity demand for XRP won't just rise, it'll multiply exponentially. And that's where the 6,000% rally prediction stops sounding insane and starts sounding mathematical. It's not about hype, It's about supply and utility. When liquidity corridors require billions in XRP to function, and most holders are locked into utility contracts or custody reserves, the float left on exchanges will be microscopic. Prices won't just rise, and they'll reprioritize. So if you're holding XRP right now, stop asking when moon and start asking, what's being built while I wait? Because the groundwork is already there. The question isn't whether XRP will win. It's whether you'll still be early enough to matter when it does. Now, before we wrap this up, let me make something absolutely clear. I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are volatile, unpredictable, and you can lose all your money if you don't know what you're doing. This video is for educational and entertainment purposes only. Always do your own research, diversify, and never invest more than you can afford to lose. But if you've watched this far, you're not just chasing price predictions. You're here because you see the bigger picture, a financial system that's shifting from control to freedom. And XRP, for all its controversies, remains one of the few projects still fighting for that freedom in its purest form. So here's my challenge to you. Don't just hold. Understand. Follow the tech. Follow the adoption. Because when the real utility phase begins, it won't reward those who were loud. It'll reward those who are ready. This is Jason William, and if you got value from this breakdown, smash that like button. Drop your thoughts in the comments and join our free educational Discord. The link's in the description. Trust me, the conversations happening there are the ones that will prepare you for what's coming next. And as always, stay sharp, stay curious, and I'll see you in the next.